Hello traders, Gary Odom here. This will be a review of what I call a TWZPI, which is actually TWZPI standing for Zone Prediction Indicator, and it is a super indicator. I'm excited to tell you about it. I've been using it for about 7 or 8 years now and has never failed me. Uh, Using it and explaining it is not always as easy as one would first perceive. But once you get your teeth into it, it becomes second nature. So let me kind of give it a shot and see where we're going with this. To begin with, we have lines that's being drawn across the screen here. You see these red lines and the green lines, and I'm going to scroll it back. We have them all the way back, and I'm going to tell you what I want you to know is that just because the line has gone away does not mean it could not still have some impact further down the road. Now, typically speaking, conditions will change, so it might not be so viable as the most recent one, but don't discount it entirely because you'll be surprised as to how effective that can be. For instance, this line right here was drawn off of this candle on, when was it? Looks like March 27th, 1920. 2020, which is not so long ago. This is a 1 hour chart, so okay, that explains that. I thought I had a day chart up here for a minute. It's okay, we use this one. And you can see it drew this green line. There was some red lines up here which refer to as bearish support zones. We refer to the green lines as bullish support zones. You notice that I don't use the word support and resistance because I'll look at it a little bit different because of the way price acts in these zones. And I'll explain it in a video. But you can see here that it drew a line here saying, okay, this is a bullish support zone. And up above it was a bearish support zone. Sometimes when you see one over the other, you'll see that where trading will become consolidated and range bound, and it will just trade between those two zones. That means that there's not a lot of momentum going on, so don't be contemplating a trade. Here, it broke through. And at the first jerk of the knee, you might say, now it's going. You've got to give it a bar or two or three to find out what's going to happen. And you'll see, sure enough, it faded. It came back. It failed the breakout. Okay? And it came back. And it tried it again. On the second time, it was successful and went on up. That's very important to look at this modality. In other words, you wouldn't want to be entering the trade in here. You would be wanting some confirmation before you enter the trade. Probably the earliest would be at this this open here of this candle, which is a red candle. I don't think you'd have to go all the way up to the high. You're going to be too late. But it's the high of the green candle and the open of the red candle, so it's a good place to get in over here, and you would have had a successful trade. Now, the point I started out with was looking in the back, in the past, towards helping you out in the future, and let's do that. Let's follow this line. It's the same one drawn on whatever I said that was, March 20th, and you'll notice price comes back and it goes through these bearish zones. Bearish zones is showing you that this is good stuff. It's hitting these zones and going right through them. That indicates that it's supporting the movement of the trade. There's no hesitations. There's no backing up like it did over here. It hesitated and came back. This is good stuff. This is good, strong, bearish momentum until it hits this line. And then it said, whoa, wait a minute. Now understand, this line was drawn back here. It didn't come from here. It came from back here. So the effect of this bullish zone is still there. If there had been a new one, this line would have been discontinued. But sure enough, it hit this line, it respected the zone, and went on all the way on through the bullish zone, the bearish zone, until it ran into a new zone, and it came back. But still in all, you had some good movement going through here. You actually had some trade signals from the TDVT, which should have taken you up to perhaps here before you got out. It's not a bad little trade. Now let's go and look at it further. Now when it did get up here and it came back, you'll notice that the bullish zone is way down here. There's no other zones drawn, yet price keeps going up. It's okay. It's okay. It's because it took off here. It did a retrace. It still got the momentum going with it. And it's proven by the fact that it breaks through these bearish support zones. It breaks through these bearish support zones. It breaks through these bearish support zones. You notice it stalls when it hits these zones. And it stalls when it hits these zones. So what does that mean to you? Does that mean that maybe you could plan trades that would come in here? Or like this one says here? You bet. You bet. It also means this to you, that this thing has not run out of energy. I don't know what the wave count is at this point, but it hasn't run out of energy. It's still going. It's still crashing through these zones. And as long as it's doing that, you can plan on staying in it. Now, finally, it gets up to this point, and you get a big red candle. This is another retrace. But then it develops this bearish support zone, and 1, 2, 3 candles, it respected it, and it came down. It got a little hiccup here, and then it discovered this bullish support zone that was drawn right here, and away it went. So what happened was it did detect some downward momentum, and it just kind of tailored off, and then it developed a bullish angle, and away it went. It plotted it for you, said, okay, the environment has changed. You see that this one has stopped now because we have a new bullish zone. This one is still good, however, but you're nowhere close to it, so you can forget about it for the time being. So it saw this zone. It said, great, that's what I want. It's, again, a good indication of a place you might want to entertain a trade. We've got several candles over that zone, and the way it is, we did get a indicator from the TDVT. The TDVT will rarely ever be as quick to suggest a trade as you would be when it breaks through these zones. And that's because this is a more highly confirmed trade than the other would be. I know I have a friend who lives in Canada, and I gave him one of these studies 7 years ago. It hasn't been changed in 7 years. It's the same study, and that's all he did. He just traded the breakthrough on the lines. He did exceedingly well. He was doing better than I was at the time. I was envious. He's using my software, and he was doing better than I was. That's okay. And we run out of momentum, and down it comes, and it hits the bullish zone again, and it's stuck. It's stuck. It's stuck. It can't go below it because it doesn't have the bearish momentum to push it through. And you see we got a zone here, and then it created a new zone here, and we have the bullish zone below it. Should it have enough momentum to break this bullish zone, pardon me, and go through the bullish zone, you would probably see it drop like a rock. But it's not doing that. It's got support here, and it goes up. It finds this is the same zone. It's the upper limit. Sometimes it'll bracket out to show you the top and bottoms of the zone, to give you an idea of just how much it carries. Like when it broke through the bottom here, you're pretty sure it's going to go all the way up to here, because it's going to generally go all the way to the top. It's rare that it turns in the middle. And again, it's trying to run out. The bears are trying to get hold of this signal and bring it down, and they start pushing, and it broke through here, and then it broke through here. Oh my! And then it broke through here, and that's when you got also a TDVT signal. So in this case, they were absolutely timed perfectly, and sure enough, it's a valid signal. It hesitated at this bullish zone, but it came back up, and it still got that bearish power, and it drove through. It tried to stop it again, but it still got the bearish power. It drove it through. We got another signal from a TDVT, and down she goes. It did a retrace, and it ran into this bullish zone, but it failed to come through. Still throwing bullish zones out there, and finally this one supports it. You can see it came up, it tried to go back, but it jerked right back up. It tried to go back, and it still popped up. So it had these multiple attempts trying to get through, and it couldn't do it. And finally, it got out. And this candle here would been a good one to get back on. You talk about a rubber band trade. Here you got one big time. And away it goes. And basically, that's the way you use it. You know, without having like these specific rules, you just look at it and you say, okay, here's what's happening, and that's the story. That's the story of how it works. Looking at, you know, the power of momentum, the energy it has behind it, and where it sees these resistance points or support points, and how it reacts to that. That tells you what price is going to do. It is a prediction device. When you see it bouncing along this line like this and not penetrating, and then you get a big candle like this, followed by another candle, it's just predicted it's going up. And it did. It did. So I hope this explains to you. You have to use it a while before you really have a comprehensive feeling and understanding about it. But it's highly predictable. It never changes. You're going to get the same story chart after chart after chart. It's not like it works this way on one chart and that way on the other chart. Now, they will make a difference, however, on time periods. So I'm going to throw the day up here just so you can see. You see, everything is kind of longer range. But we still got the same thing. Okay, price is coming up here. It's coming down. It's hit this bearish support zone, and look, it didn't even hesitate. It just kept on going down. That's just what you want to see. It hit this bullish zone, which was created. Where was this created? I can't even see it. It drops off the picture. Anyway, it's before it's before October. It's before October 2019. It's before that is when this zone was created down here, and yet you see price respecting it. So tell me that this doesn't have power. All the way back to before October 2019, and it comes down here and hits the same zone. It hits the same zone. It goes up. It actually draws a new zone now, and it drives it up, and it's still fighting. You know what's going on at this time, don't you? When price is going wacko, you know, this is the early days of the COVID, right? And there's the little retrace we got from the COVID, and then it comes back. Yeah, this is what's happening during the COVID. So, you know, it's trying to be bullish, but it just doesn't have the momentum to handle it until here. Then it breaks up and goes on up. This is a really unusual market to trade right here. But even that market, you can read something out of it. So that's all I have for you today, guys. You know, let me know if you need anything. It's topdogcity@gmail.com. I'll do what I can for you. Happy trading. And speaking of COVID, be careful out there, people. This is serious stuff. I'll see you on the other side.